What's going on? Making $167 trading Home Depot. We got a trade recap. Let us cover it. So this trade I took a while back. The first day, or the day I entered, was back on April 26th. It's now May 10th. It's kind of a long hold. There was a swap fee of like $4. So technically, if you were not going to cut the fees, I made $171. But after the little bit of a fee, it was like $4, like 50 cents a day, maybe something like that, 20 something cents a day, whatever the number was, and swap fees. So let's get into it. And here is the trade. Pretty straightforward as of right now. We're off to a good month. We have 11 trades in, and we're operating at a 72.73% win rate, which is higher than I have been averaging the past couple of months. But that's also maybe because we're evening out, right? After the past couple months of being pretty bad, now we're maybe having a good month, right? So that's kind of how it goes. But either way, let's get into it. So Home Depot, the play here, this is also the second trade, not in a row, but the second trade of the month where I played at least the second trade of the month, where I traded the inverse breakdown strategy, which is essentially just an extension off of my breakdown strategy, which I have a breakout and a breakdown strategy. It's the same thing, just up or down, depending upon what's been happening prior and where we're consolidating after what move. And this was like, we have a nice consolidation breakdown right here, but we had that day where we just came right back and closed above the breakdown point, above that consolidation low. I was like, interesting. So when I saw that, and that happened on decent volume, I actually initiated a long position. Now, the volume the next 2 days was actually terrible shortly after I entered this trade. Is that super surprising? Not really. But I entered a long position there. And when I did that, I had a stop loss under that low. So we got kind of close. We got like $3-4 away from the stop loss on the May 1st, Wednesday. Market was red, I believe, and Home Depot came down a little bit. Then it bounced right back, but it never actually closed a day underneath this blue line, which was the lows of that consolidation prior to this breakdown. And I was like, okay, well, that's a good sign. So that's why we stayed in. Nothing to do, just chilling. And eventually we kind of pushed back and pulled back for a couple of days, had a nice push, and then we hit our 349 target today. The thing was, luckily this is on Friday. They have earnings on Tuesday, so I was not going to hold it to Tuesday. I was either going to close it out today or on Monday, depending on how I felt, how we closed, whatever was happening. In a perfect world, I was like, well, if I have to close it out, I would like to close it out before the weekend's over, just a clean slate. But technically could have held to Monday because there's no earnings worry until Tuesday. But I'm glad it hit today. It hit just shy of 350, hence why I like to put my sells $1 or so below whole numbers. I was talking about that in a live stream, I think, recently, or a trade recap recently. And this time it hit, and we popped to 349.80. 349.80. So I could have put a little bit higher, but it worked out fine. That's it. Simple as that. So inverse breakdown trade. And again, this needs to be like I can't play this inverse breakdown in we're trending down the past couple of weeks, but I can't play that unless on the bigger time frames you got an uptrend, and that's what we have. We've got a nice trend to the upside. We got some higher lows, higher highs, dating back weeks and weeks and months prior to this. That's the criteria. So while yes, you can have a shorter term time frame downside push, which we have. However, if we consolidate and then that breakdown fails to close that low, that indicates we could be looking at an inverse trade. Now, these trades tend to take longer, hence why it took longer. When I trade them on the 5-minute time frame, which I used to, when I started initiating this strategy, I did it on the 5-minute. And what I always found was that all the time these took longer. Why? Because you are essentially using this as your signal that the short-term trend is going to revert back to the longer-term trend. That's what it's telling me. Now, again, is that a 90% winner? No. It's like more often than not, I am finding that given these circumstances that I'm able to profit off of that trend reversal. And even if it's a flip of the coin half the time, it doesn't really matter. As long as you got good risk management, you're good. If I had traded this setup 100 times and I literally won on half, but I risked 1 to make 150 or 1 to make 2, dude, that's a great strategy. That's a great strategy, you know? So that's really all it is. And so that's where we sit. I don't know how much more. I do have an open position on JP Morgan, which is actually continuing to grind higher and higher, which looks really good. But that I don't know if I will be getting out of until, well, at least next week. I'm holding it over the weekend unless something crazy happens. But if we get above 200, I'll likely move my stop loss back to break even. And because at that point we will have been at roughly, I want to say this 200 area would be approximately a 1-to-1. Yeah. It's about a 1-to-1 risk reward. So the trade technically, or the idea technically worked. I'm going to move my stop to break even if we get above 200. And then once we do, I'll move it. And then we're looking for 203. And that's the deal. So that's where we are on the month so far, 724 in the green, which is kind of nice. And our average win-loss, I'm loving that number. 2.19, meaning our average winner is like more than double the size of our average loser, which is great. And I'm happy with that so far. Thanks so much for watching. I'll leave a link to TradeZella where I track all this stuff, like always, down below. And I'll see you in the next one. Peace.